Good afternoon, everyone. Thanks for joining us today. Really excited to get an update with Discovery Silver, who had a big announcement this week. So with me is my colleague Magda, and presenting today will be Forbes Gemmell, VP Corp Dev, and Tony Makuch, CEO, who was recently appointed permanent CEO. So that's exciting. Discovery Silver trades on the Toronto Venture under the ticker DSV. And as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And there will be a Q&A session at the end, so feel free to enter your questions in the Q&A box. With that botched intro out of the way, I'd like to introduce Forbes and Tony. Nice to have you back.
Yeah, it's good to be back. Good to be here, and good to get it. I really appreciate the opportunity to talk to everybody and give a sense on what we see at Discovery Silver, and we think we're on the pretty exciting project, both in terms of what the value is that it demonstrates to shareholders, as well as what future value will be created. And I think there's still lots of exploration upside here. It is by one of the more exciting silver base metal deposits, I think, is sitting around in Mexico and probably globally that's undeveloped. So.
Great.
And maybe with that, we can just get into the presentation. As mentioned, we've got a few slides to go through. Both myself and Forbes will give a little bit of some color on this, and then and as mentioned, we can do a Q&A. So go to the first slide. Sorry, there's one slide back there, Forbes. There's a slide on forward-looking statement. I think I really want to make sure everybody recognizes that we may be making some forward-looking statements in this discussion, or maybe will be. I would say a lot of what we do is giving you a sense of what we think could be happening in the future. It's based on the knowledge you have today, or based on views today. Anyway, read these. Please read this disclosure and understand what the implications are. Anyway, the very next slide here, Forbes. This kind of gives a little bit of a checklist in terms of where we see the Cordero Project down in Chihuahua State of Mexico. What you have is a very large resource base at Cordero, but what we've outlined in the PFS is an 18-year mine life of over 30 million ounce silver equivalent production, and being in the bottom half of the cost curve in terms of the industry. So you get a sense on the scale of this project, and the 30 million ounces of silver equivalent production. That's for the whole 18-year mine life. And for the years 5 and 12, you're exceeding 40 million ounces a year, and even up to close to 50 million ounces a year in year 11. It's a very capital efficient project. We're looking at somewhere around 500 or 450 million, I should say, to start up to build the project, and then went on phase 1, and then go into phase 2, where you finance the project through cash flow from the business. So very efficient in terms of what to be done there. It's a simple process design and a very simple scope to what trying to be built on this project. When we talk about permitting, we because of the simple scope, I wouldn't say simple scope, because of the able to fully understand the scope, we see it as being a very clear and transparent permitting process. And in terms of what needs to be done to get this project permitted in this region, and you're in a mining-friendly region with very historical mining. I think mining's been taking place for almost 200 years in the district of Parral, and we're about 18 kilometers from Parral. And so you have suppliers, you have people, you have mining history in the region, and a clear understanding in terms of what needs to be done to get things permitted and to get things moved forward. You have what we believe is a very proven management and board and a company, and with a lot of understanding what needs to be done to build a project, as well as to execute on a project. As we talk about in terms of size, margin, scale of the project, and the fact that we feel it's probably one of the best undeveloped silver projects globally, and in terms of size, etc. And I'll give you some slides a little bit later to show you where this sits in terms of the peer group, and in terms of the market, and how this is really one very special deposit and very special project. And we talk about the metals, but the other thing is this project is producing the metals that we see the industry needs going forward, whether it's silver, and as well as lead and zinc as byproducts coming out of this project. I think about 50% of the metal value is produced from silver, another 35% from zinc, and 15% from lead. So, next slide. This, just gives you a quick overview of where the project is. And just as we talked about in the state of Chihuahua in Mexico, and just not far from the town of Parral, approximately 2.5 hours by driving from the city of Chihuahua on a 4-lane highway. And I guess some of the other parts about it is the scale of the project, scale of the deposit. The outline deposit here is plus 1 billion ounces, of 1.1 billion ounces of silver equivalent on the project. And the actual PFS, and we'll talk a little bit more about that later, but the PFS actually really only mines less than half of that total resource on the property. Next slide. I'm just giving you a sort of maybe an understanding of where we're going with the company, what we're looking at in terms of things to look forward to, and from a value creation. We just completed the pre-feasibility study here in January 2023. We intend to continue on now with advancing from the pre-feasibility study to a feasibility study. We'll probably come up with an updated pre-feasibility study sometime in Q3, looking at ways to continue to make improvements in that. Combined with that, now that we've completed the pre-feasibility study, we can begin a little bit more aggressively in terms of permitting and what needs to be permitted for the project, both from land use and water, et cetera, power. So there's a lot of that can be going on. And the intent here is sometime in Q1 or late Q1, early Q2 of 2024, come up with a feasibility study for the project, which fully outlines what needs to be done in the final engineering, et cetera, so that we can move forward to final financing and get together to build this project. Next slide. This slide is just giving you, I think the thing is, again, we talk about the scale of this deposit. And if you look at it, and this is just a pure silver alone portion of it, where, with the release of the PFS, also Discovery been able to release its maiden reserve for Cordero, which is in excess of 250 million ounces of silver in the ground in the one project. And you can see how this competes with peers, with other major silver producers, and how this one project is larger than any of the, in terms of a reserve base, and a lot of the other companies. I mean, the majority of the companies to the right on this graph, and some of these are from more than one mine, and definitely with Pan American Silver as a significant reserve base. But again, it's from more than one specific deposit. This next slide gives you a sense on where this sits. Again, from a production point of view, over the life, as we talked about, over the life of the project, somewhere around 33 million ounces of silver equivalent produced. Over the years 1 to 12, in excess of 35 million ounces a year produced. And what we don't show on the slide is actually between years 5 and 12, over 40 million ounces of silver equivalent produced. So, it is a single project that rivals the production of the major peers in the industry. And again, it's one mine, one deposit being mined at this level, not compared to the others. And then also, if you look at it from a cost perspective, it is definitely in the lower half of the cost curve in terms of silver production. And maybe I'll pass on stuff, Forbes, if you can take on this project, this slide, and continue on, if that's okay with you.
Yeah, thanks, Tony. So, look, before we jump into the PFS results, I thought it'd be good to lay the groundwork of the qualitative characteristics of the Cordero deposit. What's really nice about Cordero is its size. It's a very large disseminated system, and lends itself to good predictability. So we've drilled about 300,000 meters, which is obviously a lot of drilling. And when we publish our reserves, that's translated to more than 50% of reserves being in the higher confidence category, that proven category. So it speaks around our confidence of the underlying ore body and the distribution of the tonnage and grade throughout the deposit, which is ultimately the bedrock for any economic study. What's really nice too is the metallurgy. It's one thing to dig the rock out of the ground, but then it's another thing to be able to liberate the metal from that rock. And for us at Cordero, we get very good recoveries in that 85 to 95% range for silver, lead, and zinc. And what's also really nice is those recoveries come at a very coarse grind size. So we don't have to grind to a very sort of fine size. We're sort of targeting 200 micron, which has very positive implications from a capital and operating efficiency point of view. And look, we're also very well set up from the existing local infrastructure that surrounds the project. We're just showing you our land package here. It's a very large land package, so a lot of space for the layout of the infrastructure. We have a highway down one side. That's the highway that Tony alluded to that goes to Chihuahua City in the north, where there's an international airport, about a 2-hour drive, and then to the town of Parral in the south, which a classic mining town, population of 120,000 people. That will be our source of labour for the operations, which means we won't have to have a camp. So again, that's a big savings from a CapEx and OpEx point of view. What's also nice is the deposit comes right near surface, and the local topography is very gentle. And so we're not dealing with this huge amount of earthworks. A lot of the big CapEx blowouts we've seen here in Canada have been because of the complexity of the earthworks. You're dealing with clays and tills and water. That's not the case here. Very gentle topography, and the bedrock itself very benign and excellent geotechnical characteristics. So if you take all those qualitative characteristics and then you put the economic study in, and some very impressive numbers shake out. We've got an NPV of $1.2 billion. So that's at $22 silver, IRR just shy of 30%. Given the size of the deposit, there's excellent torque here to high metal prices. And so if you increase those underlying metal prices 15%, NPV is now almost $2 billion, IRR is almost 40%. And in fact, if you actually run the economics at spot prices right now, they're effectively the numbers that you're getting. Tony's already talked about the size and margin of mine life, what we feel are certainly tier one characteristics within the silver space. And then the CapEx intensity, because of that head start, we talked about the NPV to CapEx ratio is 2.5 times at a $22 silver. And usually you want to see something above 1.5 times. So to be so far above that obviously speaks volumes to the CapEx efficiency of the project. I thought it'd also be good just to take a little look back to typically any PEA that gets put out is usually the best numbers a company will put out on their project. And the reason being is a very loose level of confidence, not only in terms of the operating capital estimates, but the mine plan can also include inferred resources. So usually when you come in and tighten up and try and upgrade those resources, tighten up the engineering, usually you lose a lot of value. And what's been really nice here, and despite all the sort of inflation we've seen on CapEx and OpEx, that the NPV we generated from this PFS at the same metal price is the exact same as what we saw in the PEA. So that's a fantastic result. The IRR, the internal rate of return, that's come down a little bit. That's been largely driven by eliminating the heap leach, which is actually a good news story. We'll talk to that. But the heap leach and the PEA was just a 1-year construction period, so you're into cash flows right away. So that bumped up the IRR. But certainly the PFS, still a very attractive number at just shy of 30% there. The big win we saw was certainly on the exploration side. A lot of our drilling at depth and in the northeast of the deposit was successful. So we've extended the mine life from 16 to 18 years, even though the mill throughput in the PFS is 25% higher than what it was in the PEA. So on an annual production level, we're almost 30% higher in terms of production. And on a life of mine basis, we're sitting there almost 600 million ounces. That's almost 40% higher than what it was in the PEA. So a very good result there too. The CapEx, look, obviously CapEx increases have been the topic of the day. Ours increased a little over 20%, but keep in mind the mill we're building from day one is 25% bigger. And then we also switched from contractor mining, where there's very little capital up front, to owner-operated mining, where you do have to put some capital up front for the mine equipment. And that was driven by the size of the pit getting 30% bigger is certainly a lot more economic to go to owner mining. And then any inflation that we saw through the course of the year was effectively offset by getting rid of the heap leach. We saved about $60 million for getting rid of the heap leach. The payback, we're sitting here at 4.2 years. The key there, that's the way that's gone up, is the mill expansion actually occurs in year 3. And so that delays the payback. But that timing, that mill expansion is completely discretionary. And it's something we'll look at once we have the chats with the sort of lenders and how they see the project to potentially push that back a little bit. But that sort of explains that increase there. And then from a cost point of view, look, despite inflation probably running at 15 to 20% over the last 12, 15 months, our AISC only went up by 10%. And main drivers there have been better processing costs from improved metallurgy, as well as lower unit costs from the higher throughput. So look, I'm just going to finish with 2 slides. I mean, Tony sort of talked about the size of the silver reserve, and I think it's important when you look at supply demand, there's not much in the way of big silver deposits out there to come through to meet the increasing demand. According to S&P Capital IQ, we're the largest undeveloped primary silver deposit globally, with close to 270 million ounces of silver. But you can see there's only 3 deposits over 100 million ounces, and then it drops off quite a bit to the next list. And some of those are obviously more challenging jurisdictions and projects that have recently been stalled. So certainly when you look at the new up-and-coming silver stories, we feel we're very well positioned, given the quality of the deposit and as a backdrop to that supply coming online. From our project, you've also got this increasing demand that we're seeing, especially from solar and especially from silver's use in electric vehicles. And you can see, even if you go back 10 years, the demand from those 2 sources have tripled. It's gone from around 50 million ounces to over 150 million ounces. Keep in mind, total silver production is around 800 million ounces. And so all the other areas of demand, investment demand, as well as all the other fabrication demand that you get from silver, obviously we're going to create a deficit here, especially given we feel we're in the early stages of this shift to green energy, and certainly so much more room for growth on the solar side of things. So certainly when we look ahead to our 20-year mine life, a very nice time to be bringing one of the biggest silver mines online to take advantage of that increased demand. So look, that's the presentation. We want to keep it relatively concise to allow time for questions here. So we'll hand it over to Deb and Magda here to liaise with those questions.
Perfect. Yeah, thanks for the overview. I think Magda's going to start the questions off with some technical questions. So I'll turn the mic over to her.
All right, so thank you for the update. I wanted to go back to the resource for a moment. So looking at, you came out with an updated resource with your PFS, and the mineral resource that went into the PFS compared to the PEA resource, you had growth in measured and indicated ounces, which went up by 30%. And looking at the latest release, you said that grade went up and tonnage went up. So I think you touched on like where the tonnage increased, but maybe you can tell us a little bit how the grade went up as well.
Oh, maybe just jump ahead to, so maybe this image. So this is a plan map looking down from above on the deposit. This is the outline of the PFS open pit. And then this is the outline of the resource. And so we talked about the amount of the resource that actually is outside of this pit. Remember, we're only actually processing around 40% within this sort of PFS mine plan. So a lot of the drilling we did was at depth below the sort of pit, as well below the PA pit and up to the northeast. And so there wasn't a lot of drilling that went into the PA there, and so that increase in tons and grade was effectively just being driven by the drill results from that drilling. So there's been a lot of drilling sort of down the southwest. It was between us and the previous operator. It was only when we came in and basically followed this main structural trend and some of the drilling success we had there that translated to those improvements.
All right, thank you. And then skipping ahead to the production profile from the pre-fees. So the pre-fees says it's mill only, and peak throughputs went up 30% compared to the peak mill throughputs in the PEA. And then your silver equivalent ounce production went up by around 40%. And the PEA also had a starter heap leach, which you've kind of taken out. So can you tell us a little bit about the rationale behind taking out the heap leach and also increasing the throughputs?
Go ahead, Forbes. You can talk about the heap leach. Fairly straightforward.
Yeah. All right. Well, so what we're showing here is the process schedule over the life of the mine, and you can see the oxide mineralization that's being fed to the mill is shown here in gold. The sulfides are in blue. So first point to note is the oxide, it just sits above the sulfide body, but the sulfide body that's the big beast, that's the engine room, but you obviously got to mine through the oxides before you get to the sulfides. So the follow-up test work we did, because the PEA assumed that oxide would go to the heap leach, but the follow-up test work we did this year or last year, we actually started getting slightly lower recoveries than what we saw in the PEA test work. So it's about 60% recoveries for silver. And with the heap leach, you don't recover any lead or any zinc. And so we ran some test work blending in the oxides up to a level of 10% oxides, 90% sulfides through flotation. And we did multiple tests, and what we saw was silver recoveries actually staying the same at 60%, but we saw lead recoveries of 40% and zinc recoveries of 85%. And so obviously with that huge change in differential and now actually getting much higher recoveries through the flotation by this blending, it made perfect sense to get rid of the heap leach and just build a flotation circuit only. So that saves us 60, 70 million of CapEx. And then because we're not using cyanide, we think that should also be much more expedient from a permitting point of view in Mexico too.
Yeah, no. So effectively, a simplification of the infrastructure on site. You didn't have to build a heap leach operation and then go to a sulfide mining operation, right? And processing operation. So by able to blend it in, it helps you. And then you say we get improved metallurgical recoveries, simplify the site infrastructure, and eliminate a lot of use of cyanide on site. And heap bleaching for silver deposits doesn't perform as well as heap bleaching for gold deposits, right?
All right, thank you. And then I want to touch on the costs for a moment. So can you talk about your capital and operating cost assumptions and the level of confidence that you have in those?
Yeah, I've got a few slides here. I mean, this just talks to the numbers. I think, and this shows you the changes versus the PEA. So we saved 60 million by getting rid of the heap leach. We've also increased the plant size, and that switched to contract owner operated mining. We had about 80 million of CapEx increases there. And then the other big driver was the impact of inflation, around 38 million. It's still a very capital efficient project, and often there's questions, well, it looks almost too capital efficient. But Ausenco, who did the design, did a benchmarking study where they basically looked at all process plants, which is where most of your CapEx is tied up, the size of the plant versus the amount of direct costs associated with that process plant. And so typically there's obviously a positive relationship between those two, but you can see Cordero effectively fits right on line with that trend. So we feel it stacks up well from a benchmarking point of view, and then all the qualitative attributes we referenced before. Certainly some of the projects we're seeing in Canada, and Tony's visited quite a number of those, but the earthworks here is very straightforward. You're dealing with good bedrock, with good geotechnical characteristics, and the deposit comes right near surface, so you're not dealing with a huge amount of pre-strip to get to the ore bodies. So certainly they're key contributors to the overall capital efficiency. I'll quickly touch on the operating costs too. So look, mining, these are the life of mine costs. So really mining and processing is really where all the operating costs are tied up. And again, often the trap here is to compare Cordero to a lot of the gold CIL plants, which overlooks the fact Cordero is actually a concentrator. We're generating concentrates that we then sort of obviously send off for refinery. And so if you actually compare Cordero to the big copper concentrators with similar throughput levels, first of all, you can see our mining cost of $2.45 a tonne life of mine actually compares very well. Almost looks a little bit conservative, especially given these are operations in Canada, where the labour costs are much higher. And from a processing cost point of view, again, we're looking above the average. And this is despite the fact that we're going to a very coarse grind size of 200 micron. And the work index is in line, if not sort of below some of these other comparables. So again, this was another benchmarking exercise we did just to really build the veracity of these underlying assumptions. The G&A is a little bit below, again, not a huge contributor to the overall operating cost, but that's explainable by the fact we're in Mexico, which is obviously a good cost-effective jurisdiction, and the fact we don't have a camp, as we talked to before, where we could take advantage of the town of Parral, which is just out the project.
All right, thank you. And we had an audience question about mining. Oh, sorry, Deb.
Actually, there was an audience question about CapEx too, which might fit nicely into this conversation. So how do you plan to meet the CapEx required? How much new equity and debt is required?
I'm going to take that one, Tony.
Yeah, I mean, it's we're I guess these are some of the things we'll be planning over the next while. Definitely, as we further de-risk the project and have a lot more leverage, I suppose. But more than likely, you'll be somewhere around 50% equity, 50% debt, maybe a little bit less equity and more towards debt. I can tell you, and I guess there's a lot of things to work on. There's a lot of moving parts there. I can tell you what we're going to shy away from. We're going to shy away from selling royalties. We're going to shy away from any kind of streaming type, metal streaming, etc. So we're going to try to work towards traditional project style debt and work with whatever we can from an equity point of view to help in terms of advancing this project. I think that the biggest thing we do by the level of detail we put into and the quality of work we put into an updated PFS and an feasibility study will help us provide a lot more surety for shareholders in terms of what we need to do and how we can get this project financed. So, that a good answer without giving a proper answer?
That's a tough one to answer. You did a good job, Tony. Magda, did you have another question?
We had an audience question as well while we're talking about mining. Please comment on pit slope and dewatering assumptions and water treatment assumptions for the PFS.
You want to go through that?
Yeah, the pit was broken up into 5 geotechnical domains. There was a dedicated geotechnical drill hole drilled into each of those domains. And then Knight Peasold, who were the consultant who did the geotech analysis, also reviewed I think it was over 100 drill holes of our exploration drill holes and all the geotechnical characteristics, lithology, etc. So they did a very detailed review. If anything, the geotech for the pit slopes is at feasibility study level. We don't really have to do much more given the amount of work that's already been done. And then around the hydrogeology, we've already drilled 6 hydrogeologies in and around the pit. And based on those results, Knight Peasold estimated the water inflow over the life of the mine. And for us, obviously, that will contribute probably for phase 1, sort of 30 to 40% of our water processing needs. So it's sort of a part of that dewatering will actually work in our favour from a water supply point of view. But certainly the work Knight Peasold have done, a very reputable consultant. We're almost sort of ahead of where we need to be on both those fronts as we look ahead to the FS here.
Thank you. And then we have another audience question. If all goes according to timeline, when would you expect to make a construction decision?
Yeah, we'll be submitting the big permits, the EIA, it's called the MIA in Mexico. We'll be submitting that first half of this year. Typical turnaround time there is, say, 12 to 24 months. So we feel that's the critical path item for that construction decision. But if you assume it's 18 months, then we're looking towards the end of 2024 for that construction decision. And obviously, we'll have the feasibility study done well in advance of that, and that gives us plenty of time in terms of having the discussions with the potential lenders and the offtake groups in the meantime too.
And that's very roughly mid-2024, early 2025, right? The latest.
Okay. And then we have an ore blending question. At one point, there was mention of blending high-grade underground ore from the Josefina vein. How do the veins factor into the PFS plan?
Things we talked about before your time, Tony, but just for context, this is the Josefina fault. And in our very early stages of exploration, we were getting very high-grade vein hits along that trend, that Josefina vein trend. But the more drilling we did, it actually emerged. You've almost got sort of two main fractures there with a lot of mineralization in between. And so rather than just narrow intervals of veins that are sort of 1 to 2 meters wide, we're actually starting to hit 20 to 30 to 40 meter wide intervals, averaging anywhere from 100 to 250 gram per ton. So they're just going to fall into the pit. They're not discrete veins, so it doesn't make sense just to mine them via underground methods. So they'll, as you can see, there's a decent portion of those that fall within the pit, and they'll just be mined via open pit mining methods. And keep in mind too, in terms of the resource model, we did constrain that high grade so that it wasn't having a biased influence of the surrounding rock either side of the vein too. So we were realistic in our predictions of the grade nature along that trend.
Well, the other part, it would have put a lot of complications trying to, start a pit on site and doing some, low production underground operation concurrently, right?
Yeah, so you can see maybe E is a better one there. So that would be that Josefina vein trend that dips up to the northwest. And you can see certainly some high grades. It's often not as wide as some of the other parts of the deposit we see, but in some areas, it is probably 30, 40, 50 meters wide there too. So that gives you a bit of a feel for the grade distribution along that trend.
All right, thank you. And then we have one about scheduling. What aspects of the progress to be made at Cordero concern you the most in terms of where delays might arise?
I think between now and critical completing the coming up with a feasibility study, some of the critical things we're working on now to support permitting and support advancing a feasibility study will be water, land, a lot of access, land, permitting, and power, right? Those are some of the critical things that need to be worked out over the next year and a bit. But after that, once you get into a construction decision, one of the benefits of working in this region is it is a mining friendly jurisdiction. It's well located. You're on a 4-lane highway. You got a major city in Chihuahua. You got a major mining center in Parral. You come on a 4-lane highway to site, come about 15 kilometers off of that on a gravel road to site. So access to bring materials and supplies and equipment down to site should be fairly it's not going to be that challenging in that sense. It's not an isolated location. It's not going to be where you build a camp here, etc. So there's a lot of positives in terms of procurement and execution as you move forward. And because you're in a region where you have access to suppliers, access to contractors to support the industry throughout the region here. I would think that, we're not at that stage yet, but there's a lot of things that come in favor to de-risk the execution of the capital program to build this project. But first thing we got to do over the next 12 months is complete a feasibility study, continue to make some improvements on our pre-feasibility study. We think we can achieve, continue to explore to add some new value, we think, for shareholders, and then be in a position like, again, accessing water, accessing power, and completing all the land access and permitting. These are the critical things that affect the project and that are really going to support completing a feasibility study. So.
And then, so touching on the feasibility, the PFS mentions that you're looking at like increasing the bench height, increasing the size of the equipment, deferring the expansion. Are the mining rate and the process increments of 25,500 tons per day, is that kind of set, or is that also potentially up in the air?
What we're doing is we're going to continually working on trying to improve the mine plan and the mining, look at the different equipment. I mean, in the PEA, it was designed around 100-ton trucks. Now a contractor, now we've kind of went between looking at where you contractor operated versus owner operated, and looked at some design engineering designs and for the open pit and scheduling. Came up with much larger trucks, double the size of those trucks. I think there's a lot of some geotech work to be done again this year, and some work to be done on optimizing actual bench height, and what we think we can what feels right for the project. And as well, trying to size the equipment with the trucks, the shovels, the drills to match in terms of an optimized production rate. We definitely see that the production rate at the site, I mean, geographically, the site, what it can do, the production rate can be much higher than 25,500 tons a day. That's why we do have it after phase 2 at over 50,000 tons a day. The strip ratio is fairly relatively low here at just around 2 to 1. And, I think there's opportunity to work on it, but we're going to work towards what is the optimum size of equipment, optimum, and how that fleet of equipment matches in terms of the mine design that we want to implement, right? But there's some geotechnical work to do in terms of understanding ramps and what size of ramps, how you would put it in place, where you would finally put, stockpiles, where you would finally put crushing feed and et cetera to the mill to optimize. I think there's room to increase throughput. Definitely even on the connected load, that's with the existing mill design. You want to make sure that the mine is not the bottleneck to the mill.
Switching gears a little bit, there's a lot of questions around Mexico and permitting risk, so I will try to get them all answered. So I think a good place to start is, there was a question for you, Tony, just to discuss your experience with Mexican projects. I mean,
I've seen a lot of Mexican projects over the years. I've never executed it in terms of a Mexican project, but I mean, I'll say, I've been in a lot of different jurisdictions over a while. I mean, I guess when you do look at what's going on in Mexico, I'll say the same thing as maybe what I said one time in Australia. When you close if you close your ears and open your eyes, pretty much they're doing the same thing as we would be doing in Canada or anywhere else. So, and the skill set of the people is pretty high. There is work to be done in terms, and knowledge to be done in terms of understanding what you do to execute a project in Mexico. But again, the same thing as what I've done in the past is, you build a strong team, local team and country centric team. And, we're not coming here to tell these people what to do and how to work. I think we're here to support a Mexican based management group to go and execute this project. And, they know what they need to do. We don't need to hold their hand and show them stuff. We just need to provide them with the support. So that'll be good. You don't bring a bunch of expats in here to build this project. These people know what they're doing. And you've been down to site? Pardon? You've been down to site? Yes, I have. Yeah. And maybe there's a couple of questions just on geopolitical risk. So please give an update regarding the political and social stability of Mexico, especially related to the migrant crisis at the U.S. border. Go ahead.
Yeah, it sort of showed you where we're located, and obviously we're well south of the border. I mean, the city of Chihuahua is the capital of Chihuahua State, but typically there's a border city, Ciudad Juarez, I believe it is. So that's a big city that sort of tends to be where I suppose some of these border issues may flare up. But I mean, we're well south of that, and any border-related issues, it's sort of something that we haven't seen, certainly in our project. I mean, keep in mind, this is a very sparsely populated area. We're not dealing with any local communities. It's this local town of Parral, which is actually situated on Parral Tellings. That's effectively our local community, but that's a town of 120,000 people. And we're sort of far enough in off the highway too. We're sort of 7-8 kilometres. So it's sort of from that point of view, it hasn't been something that we've come across in the project's 15, 20-year history.
Okay. And could you discuss permit issues and risk, please? And then we had a second question that referenced rumors that Mexico's not approving permits. So maybe you could address those as well.
I think often with that permitting, so there's the exploration permits, there's no new permits being granted. So that obviously doesn't impact us. So that's sort of one aspect. And that's sort of been under the AMLO government. He came into power in 2018, and he'll be out of office in 2024. It's a 6-year term in Mexico, but you only do the one term and then you leave office. There's also been talk since he's come into power around banning open pit mining. But look, since that time, there's been 3 or 4 big open pit mines get permitted without issue. And certainly when you look at Agnico, the deal they've done with Teck at San Nicolas, so they've effectively committed $500 million initially, but then another $500 million for that build, potentially for what is a very big open pit to the south of us. So I think that sort of speaks confidence. That deal was announced towards the end of last year. Looking in the background, we're submitting our permits first half of this year. The campaigning for that next election starts around that same time. So as AMLO sort of moves his way out, I suspect some of that rhetoric will die down. And then certainly when you look at Chihuahua State and where we are and the size of some of these existing operations and how big a part mining is part of the economy, obviously there's a huge amount of support there. So the risk is, at least in our mind, based on what we know to date, is that, yes, there's some political noise there, and maybe the permitting takes longer than it typically would. I mean, usually it was always around 6 to 9 months. As we've alluded to, we're sort of factoring in 12 to 24 months, which if you compare that to Canada or parts of the US where you're often dealing with permitting going on for 3, 4, 5 years, it's still an expedited timeline.
But social license, I mean, whether you're in Canada, United States, Mexico, Australia, anywhere in the world, I mean, it's always something we don't have a right to it, and we recognize that we have to, provide, proper, advancement of these projects and demonstrate a strong social diligence on the property, how we treat people, make sure we understand the environment, understand what we're doing. Water is going to be important, etc. It's a world-class project. This is in a region that you have impact, but you got to demonstrate how this can have a great positive impact, both in terms of environment, etc. And for the economy and for people in the region. It's a project that's going to generate over $5 billion into the local economy over the next 15 years. Pay over $1 billion taxes. Employ over 1,000 people and produce the metals that the world needs. We don't. Nothing comes for free, and we recognize we're going to have to go and demonstrate that. But if we provide the background and a very good project going forward and demonstrate where there'll be a positive result from this project over the long term, then that's what you have to do, and that's what you have to do always to earn our social license in every region. Right? There is a lot of mines here, and as Forbes said, there has been mines permitted, and in the end, it's the people in the regions that really give you the support that you need, in terms of moving it forward I think the Discovery's the staff and people working for the company down in Mexico and down in Chihuahua have done an exceptional job up to now and continue to do an exceptional job in terms of managing social license per se.
Okay, there was one final question on permitting, and then I think we can move on. In the context of the problems at Semirnat is dishing out to Fortuna Silver at its San Jose mine, do you anticipate any extreme pushback from Semirnat on the EIA application?
So, look, I think for us, and we talked about this, by getting rid of the heap leach, we're not using cyanide. And so we will likely be submitting our permit application for the environmental assessment in Chihuahua. If you're using cyanides for any of the gold, CIL, or heap leach operations, you would have to go through Mexico City. And then typically that's been a longer process there. There's a bit of a backlog. But given obviously we're in Chihuahua and the amount of support we have for mining in that jurisdiction, we was making our submission there, and we feel we should be much more supported in being able to move that permit through.
Okay, I think we can move on. Magda, what did you want to focus on for the last little bit?
There is a question here about warrants. Did you want to ask that, Deb?
Sure, yeah. Are there any unexercised warrants outstanding, and how much capital can potentially be raised from these unexercised warrants? Just thinking about shareholder dilution to finance the project.
No, there's no warrants outstanding.
That was an easy one. There's a question that was about first year production, if things go as planned, and resulting cash flows.
Yeah, I think we talked towards the construction decision, say towards the end of 2024, early 2025. It's a 2-year construction period. So obviously you fast forward that, you're getting towards the end of 2026, early 2027 there for initial production.
And in previous discussions, the prospect of selling the project was always an option. This presentation is heavy on Discovery bringing the mine to production yourselves. Am I reading this correctly? Maybe talk a little bit about that.
You want to take that, Tony?
Go ahead, Forbes.
No, I was saying you can take that one.
Okay, well, I think what the goal here, and again, companies always belong to the shareholders, and it's important that we demonstrate value for the shareholders. What's here, we're going to put together we're doing the work on this pre-feasibility study, and if we update it and go to feasibility, to really demonstrate the value of this project and what it means for the Discovery shareholders as a whole, what the value of this project is. We're going to work to de-risk the project over the next 12 to 14 months. And we're going to be able to provide shareholders with all the alternatives they need to make the optionality in terms of how you want to move this project forward, right? You got a team. It's a buildable project. We'll demonstrate that and demonstrate the ability to do that. Combined with that, though, we don't sit here with any egos. We'll present what it looks like, and we'll see what's the best way to move this project forward and get the value enhancement that can be achieved by building this mine and bringing it into production for the region. So we're not fixed on selling it. We're not fixed on building it. Our main priority here is to work towards demonstrate that what the value project is and what the value is, and we'll do what the shareholders want us to do in terms of the best place going forward over the next year and a half. Right?
And speaking of shareholders, can you give us a breakdown of share ownership in terms of insider, corporates, institutions, retail, et cetera?
Yeah. There we go. So Eric Sprott is there at 25%, institutions around 30%. Jupiter is probably the big holder there in around 10%. and a good mix there of retail as well as good ownership there from some of the founders, management, and board at around 10%.
Right, and there's a somewhat kind of curious question. So do you think industrial users of silver, including PV and EV manufacturers, might take stakes in silver mining companies to help secure user supply over the next few years? Have you seen that? Have you seen like any of these groups coming in as interested parties?
I think it's something we need to take a closer look at. And obviously we've started to see a few of those moves in some of the other metals. Typically, the challenge will be here, we produce a concentrate that we typically then gets sold off to one of the smelters or refiners or one of the traders. And so how you handle that ownership handoff, because obviously if there's an end user or one of the sort of photovoltaic manufacturers who needs his silver, they still want that refined product. But maybe there's a way that we can sort of work out a win-win situation there where they have security of supply down the road. So it's now that we've got the PFS out, we've got a good study here to now go off and have some of these conversations to look at these potential options, especially given the forecast demand and the potential deficits we're going to see from that growth in demand.
Makes sense. So no AMC knocking down your door yet, Forbes, huh?
Not for now.
Well, I think that we've covered off most of the audience questions, and I'm not sure if Magda had anything else she wanted to focus on, but I'd like to hear what your upcoming catalyst for the next year, like 2 years, would be.
Well, I mean, I think the big thing, again, going back to that schedule, I mean, we're going to continue to advance on the feasibility study and provide some we think there's some improvements we can get from pre-feasibility study into feasibility. So we want to give some progress as we do that. And some of the progress will be in mining rates as we talk about additional, any potential throughput rates, any exploration upside, any potential costs and changes in CapEx and costs, et cetera, that we think can be positive for the project. So we'll continue to keep the shareholders updated on that. I mean, some of the other big things again that we're working towards de-risk the project is in terms of land and permitting advancement access as well as water and power. So there's a lot of those things that are going to be done. And then we aren't doing over the next 3 to 6 months, we aren't doing a lot of exploration because a lot of the effort in terms of drilling, et cetera, is going to be focused on geotechnical drilling and now water drilling on site. But there's some exploration as we finish things here and get the project where this project is outlined fairly well and go to complete the feasibility study. Then I think we can unlock our exploration team to begin going exploring and find the next. Where's the next Cordero on that land package? Right? So.
Yeah, we're probably most excited by this sort of sand-son target. This is the main Cordero deposit here. And for a little bit of added context, this is our land package here. With this image A to A prime, we're just showing a sort of slice through the central part of Cordero. It covers this sort of big magnetic anomaly, which when we reinterpreted the data, it looks like this is the big source intrusion that you have an apophyse here that's come off that intrusion, has fed the mineralizing, along these mineralizing fractures, the system at Cordero. And what's interesting is that sand-son target sits directly above there. The rock is highly altered. We saw traces of moly, which typically means you're close to that source. We did some IP actually on the northeast side and got some big IP anomalies identified. We know IP is indicative of sulfides at Cordero. So, it's pretty interesting now that we're seeing on the other side of what we know is a mineralized intrusive that's come to surface, are the big IP anomalies. So yeah, we'll be looking forward to drilling that probably the middle of the year as we sort of finish up some of this other drilling that Tony mentioned. Yeah,
so that's, in terms of value creation opportunities for shareholders from Discovery is, again, let's complete the work. We have this project outlined, complete the work outlined, what the true value, and here's this buildable project, here's what's here, and the shareholders can understand that with feasibility study, et cetera. And again, then second part is executing to build it, and that creates value. And then third part is another part of that would be once you start operating it, and and bring it in and start producing metal and generating cash flow, that generates value for shareholders. But I think one of the other real areas and the exciting parts that I think we've had a track record over the years, in terms of what I like to do, is we also can create a lot of new value with that diamond drill bit. We think that this project, I mean, because of the project and because of Discovery Silver as it was with already this large deposit that had been identified at Cordero, we focused on that for the last few years. There's some very exciting exploration upside on property, and now we'll be able to unlock our exploration team to go start looking for the next one. And there is a lot of things to give you a sense that there's more than that on the property. It's forward-looking statements, where it's what we always do, but through exploration, that's the most exciting thing. We can create a lot of new value for shareholders as well.
And what size of drill program are you looking at for some of these exploration targets?
Well, it's initially 10,000 meters, but obviously that'll get upgraded depending on the success of the program too. So that's the initial size.
Exciting. Well, I don't have any questions left, and I think we've addressed all the audience ones. So I'd just like to say thank you, Tony and Forbes, for taking the time to run us through, and congrats on a very successful pre-fees, and thanks to the audience for participating. If there were any questions that weren't answered, feel free to reach out and we'll get those answered for you. Thanks to my colleague Magda for leading the Q&A as well. And congrats, and looking forward to an exciting year of news flow discovery. And everyone, have a good afternoon.
All right, thank you.
Thanks everybody for coming on and listening to us. Take care.
Yes.